Hey, what's going on, YouTube? Kenny here. So today we're going to talk about Snapchat, S-N-A-P. So Snapchat ran up 23% today, and so because of that, you all asked me, hey, Kenny, is it too late to buy Snapchat? And usually I'm like, hey, I'm pretty bearish because it just ran up 23%. But spoiler alert, maybe not. This is actually pretty decent. Looked at it, put the Redcliffe research scoring against it, and we will go ahead and go down the wickets with you. But if you're new to this channel, Redcliffe Research is a data-heavy, analytics-heavy research firm that deals a lot with machine learning, AI, and sentiment analysis mostly. We're trying to crack that nut. We're still working on it, obviously, but we do have, or we still are iterating and getting closer and closer each and every day. So, welcome to the channel. Other thing is, we do everything in one take, and we don't really take ourselves that seriously. So, cheers. Okay, so let's go ahead and get into the scoring and talk news. Basically, why it ran up 23%. What news was it? Obviously, earnings. Spoiler alert. Did I say that twice? If I did, too bad. Sorry. I'll say it a third time. Probably just say it like 4 more times because it's just a good word to say because, I don't know. Anyways, this is the rubric we're going to use to score. We'll go down the scoring as we go through it, but yeah, let's just go ahead and just get into it. We got so much to talk about here, boys and girls. Okay, so here's the news. Let's start with that. So if you started using Snapchat more regularly this year, you're not alone. Yesterday's Q2 earnings call, Snap CEO Evan said that the both revenue and daily active users are the highest rates it has had in the last 4 years. It's pretty amazing. Snapchat is now at 293 million daily active users, growing 23% last year. So interesting. 23% move, 23% growth last year over year. Okay, so Snapchat's growth slowed 82% when Kylie Jenner tweeted that she didn't use the app anymore, causing the company's valuation to drop $1.2 billion. So a tweet from a kind of celebrity kind of sinks their battleship. But that's not so unique. Look at how Elon Musk moves the price of Bitcoin/Tesla. So, just another thing in the ecosystem, something you have to deal with when you're playing in this the Snapchat environment, I guess. But anyways, let's continue. The app's Q2 growth could be attributed to the return of advertisers who scaled back their spending during the height of the pandemic. And again, we've been talking about this as a macro theme. Revenge spending is back, and so advertisers are getting in there, leaning forward. Snapchat grew its revenues and user base during the pandemic. But this just isn't a matter of re-engaging users with an app they grew out of. As TikTok exploded on the scene, and the creator economy boomed, Snapchat kept up by creating Spotlight, a TikTok clone. Anyways, the interesting thing for me here, especially that we are always digging into AR. So augmented reality, we made significant progress with our augmented reality platform this quarter. Spiegel said more than 200 million Snapchat chatters, I guess that's what they call them, engage with AR every day on average. Wow. Having a hard time with words today. Sorry. Apologies for you new folks, but for you OGs, you know what's up. And over 200,000 creators used Lens Studio to build AR lenses for the community. Okay, so the article goes on. In terms of the Partner Summit in May, Snapchat revealed an update to its users' Scan Friends outfits to find online shopping recommendations. That's super, super interesting, especially if they can kind of funnel them into the folks that have kind of some kind of affiliate program with them. We have a lot more of work ahead of us to build our technology and increase our AR adoption, but we're thrilled with the results our partners are seeing. We invest in our long-term camera opportunity. And then it goes on finally to beyond e-commerce, Snapchat has sought out strategic partnerships with companies like HBO Max, Universal Music Group, and double down on its own spectacles. That's those Snapchat glasses that were kind of popular for a while, but hard to buy. Yeah, of course, Facebook is working on AR glasses too. But for both companies, Snap's recent successes show the rising adoption of value of AR experiences. I think Pokemon was one of the first, obviously, that really caught mass appeal. But I mean, it is definitely coming, and the next kind of wave of AR is very interesting to me. So in terms of like the innovation curve, I feel like Snapchat is actually one of those sleeper companies that's doing it, but not getting a lot of credit. And with the stock price move and with the users actually coming back to the platform, I do see a very interesting kind of move here. So pretty optimistic on our side. Let's just go over some fundamentals real quick, just to kind of place this in a category. So obviously, $100 billion market cap here, quite a large company. But the interesting thing is the beta is 1.27, so not actually as risky as one would think, especially with a 23% move. Obviously, that's going to be updated today. In terms of institutional ownership, 62%. So, I mean, that's going to smooth the stock price out quite a bit in the short and midterm. So, super interesting. And that tells me, too, like the price move to 23% today is going to be a little bit more resilient than normal. Okay. So, again, this is going to be essentially our smoothing score. When we talk about smoothing score, really, it's essentially taking components of other folks' consensus, consensus and analysis, sorry, and really kind of folding it into our data and kind of smoothing our own data, making sure that there's no anomalous kind of detachment when it comes to what we're thinking about. Obviously, we're a little bit contrarian and we focus more on sentiment and kind of signal. But that said, we always want to have kind of a baseline. And so the baseline for this one is the tip ranks score is one of the pieces. And so, there's a couple other pieces, but we're going to showcase this one because, it's readily available. But honestly, so tip rank showing outperform. The only kind of two red flags, one red flag is the return on equity and then the insider activity as well. They sold shares, but obviously this is probably weighted a lot less. And I kind of know it is because you're still showing a score of 9 because selling shares is not really people can sell shares and should sell shares for a bunch of different reasons. When you buy shares, that's usually more signal, right? So just kind of looking at it from that lens. In terms of like analyst risk to reward, so we're looking at a bunch of 5-star analysts that have a ton of upside still, even with this 23% move. So looking at a 11.25% upside even after this move, and definitely reiterating now. So that's today. And if you didn't know, tech, Laura Martin follows a lot of the tech, and a lot of you like Laura Martin, and she's on this trade as well. She's also on the Fubo trade, though, so I don't know. It's up to you. So here's some fundamentals that we like to look at, some ratios that we like to think about. Of the things that we look at, these are the ones that we pulled down that are most important to us, at least in terms of how we do it. And this is coming from Finbox. This is something, again, that helps smooth our data, but we don't really weight it that well or that highly, but it does give you kind of a snapshot of how other people are thinking of it. So in terms of relative value against like tip ranks, a little bit different. But anyways, PE ratio, that's fine. Growing company, always going to do that. Losing money. And in fact, you always want to lose money. And as soon as you make money and people can actually do a proper discounted cash flow on you, then all of a sudden you lose that multiple, right? So anyways, losing money, no problem. Revenue is going up. That's what you want to see. And obviously that's amazing. 111% compound annual growth rate. Amazing. 5-year. Leveraged free cash flow, doing the up thing, still negative, 128 million. But I mean, sitting on 6.82 billion of total assets and only 748 million in current liabilities. So great. Sure, no worries on this one. Gross profit margin up 54%. Gross profits up. Great. Shares outstanding, getting diluted though. Not sure what's going on. Not sure why they need to raise so much equity, but it's pretty consistent and persistent. So this is a very tough red flag to swallow. Okay, this is just a discounted cash flow, kind of showing you what fair market value might look like. And obviously this is bonkers, but this is using Gordon Growth exit model. It's just a really quick kind of standard one, pulling in some of the the key quarterly financials, but I wouldn't read too much into this. Again, discounted cash flows I don't typically love using for growth companies anyways. You can try, but far too much speculation and far too much. There's just so much you have to do here that kind of just doesn't mesh. For instance, yeah, we won't get into that today. But yeah, this is just a quick cursory overview, but just really just putting this together just to show you that, hey, if you do a discounted cash flow, $35, so negative like almost 50%. Way overvalued is what I'm saying. This is the market indicator. This is showing trend exhaustion. So if you read, the way you read this is 9s are intermediate exhaustion and 13s are extreme exhaustion. And for us here at Redcliffe Research, when we do technical analysis, typically we like to use horizontal channels because they're most truest when it comes to price action. But we do use the DeMark because it has a very good working trend exhaustion candles. And this is, again, if you're new to this channel, one of the things we'd like to talk about is like if technical analysis works for a specific stock, it works, right? If you're drawing a trend line on a stock that is so sporadic that it doesn't make any sense, then it just doesn't make any sense. But anyways, point is 13 here showing exhaustion, it does go down. 13 here does go down. 13 here does go down a little bit. You could have got a trade out of it, not really. But look at these 9s that printed. Good bounce, good bounce, good bounce. Here, kind of, not really. And then nothing here, but you've hit like the beginning of really a sell setup. So you're very early in the count, is what I'm saying. So if you're 3 here, you still have plenty of room to run. Honestly, for a stock like this where it's not fully, you're not getting like 9 out of 10 signals, which would be statistically close to significant. I'd just say that the way that I would use this is just to say that, hey, at least I'm not buying on a 9 and I'm not buying on a 13. And so because we're early in the count, I think that's just fine. In terms of the technicals, the way we look at them, here it is running way over the 100-day moving average. And again, this gap up is going to be scary because, essentially 74 is really the next kind of piece of support. Obviously, you can see it sitting here at 77. Nice, very strong bull flag, holding really well. Look at the volume that came in today, holding way over. It's really tough to say that we want to enter here. You really want to look at 75 for a good entry in the short term, I would say. But yeah, that's really what I'm looking at. But there is definitely a chance that it can ladder and just go up from here because this is a very clear kind of consolidation, sideways channel action, and then ladder. So you'd want to see it for probably 3 or 4 days. And that's based on a lot of kind of research that we've done in the backside, looking at sentiment decay and sentiment half-life. Okay, so this is the same chart on the daily. The only reason I'm showing you this is, we have been close to 77. This is 76 here. So, I mean, even though they were at all-time highs, it's not as bad as you think. And again, this chart, it's not like doing this, right? It's kind of just, post-pandemic, but it's kind of just meandering up, right? And, while I wouldn't call this the channel up pattern, which is like a 90% successful pattern, I would say, that if you want to catch it on the 50-day moving average, that would be a great entry. Other than that, you're taking momentum trade, and you better be playing tight stop, Tony, is what I'd say. This is showing, I'm using this as a proxy for sentiment. This is Reddit, subreddit users, and obviously in April of 2020, really nothing, and then January, really nothing. March started to spike here. So, you probably could have caught this. Obviously you'd be sitting from March, April, May, June, but here definitely hockey sticking up. Excuse me. This is something else we use for sentiment. This is showing tweets over time, definitely on the up, and looking at 557 tweets over the course of it looks like 2 days here, 3 days. On the right is showing a social network analysis model. This is a quantitative model that tries to show relationship between nodes. We use it We use it to kind of identify if, well, this one specifically is hoaxy, and we're using it to identify bot-like behavior. So in the red is bot-like behavior, but for any social scientist, this looks pretty organic. Actually, it looks very organic. And so the reason why we look at this is, we try to stay away from pump and dumps, and since this has such good organic growth, it might do well. But very disparate, as you can see, there's this main kind of organizational network, and all these nodes, while people are talking about it in their own little ecosystems, it's not super connected. That's just to say that this is more of a kind of I would say cosmopolitan network, like a city, right? Like a lot of people don't know each other. When it comes to really propagating sentiment and kind of pushing stuff out to people, you kind of want more of a provincial network. But I mean, this is still very healthy is what I'm saying. And there's not a lot of bot-like behavior. A couple red bots here, and obviously there's a red bot in the center that's pretty massive, but a lot of human-like behavior here. So this is our Metis engine in partnership with Centrala. This is where we get our AI score from. Essentially, we had six bullish patterns. And so this is a standard deviation curve if you're not kind of familiar with it. Black swan events are over here, and we have our celestial rating. Basically, those are like 3-4 sigma events. But anyways, 2 sigma events here. When we get to here, that's a signal. Also, when we get to here on this other side of the 2 sigma, we get a signal as well. So no signals on the bear side, really. Kind of neutral flat. I mean, like if you want to call 68% a signal, then I don't know. I think you'd just be wrong. But essentially, if it's not captured in here, it's not really a signal. And while these are leaning pretty hard over here, I think positive, these look like 80 something percent. I probably should have these visualized with the percentages. No, I don't think you guys care. But yeah, no, these are exceeding 80%, which is why they're in 4 land. Probably. This one's probably like 88% or something like that. Point is, none of these reach statistical significance for us, which is 95%. So because of that, no signals, no patterns detected as well, but mostly bullish. So if you were going to kind of read into it, we would say bullish. So I think this gets a score of 8 in terms of the Metis engine, maybe 7. I'll have to double check what we printed out in a couple slides here, but yeah, that's kind of how we're looking at it. Okay, so here we go. So let's go ahead and go through it. Again, smoothing score is essentially kind of getting consensus data from everybody and kind of rolling it up and making sure that, while we're contrarian, we do want to kind of weight what everybody else is thinking. We do want to kind of understand where everybody's kind of at. And so we gave that a 9, weighted score of 9. Consensus R2, that's risk versus reward. Taking a look at analyst scores. That's the 8. Macro and qualitative, looking at a 10 for a bunch of different reasons that we're looking at, namely AR, very early in the kind of innovation cycle, tech adaptation cycle. Fundamentals, looking at a 5. 5 is average here, so just remember, this is not like bad, so 5 is average. So if the score of 50 is an average stock, is what we were saying. Whatever threshold you come up with to buy is entirely up to you. When we hit 95 plus on any stock, we're buying right away. But anyways, obviously you can already see the score is 79 here. But anyways, in terms of entries, we're giving it a 6. It's tough because of how much and how hot it's run, but the technicals still look pretty good, and it looks like it may hold, especially with the high institutional ownership, I'd say. Metis engine giving it an 8, and then the sentiment score is really high, giving it a 9. And sentiment, we did show you kind of a heat map and kind of looked at the social network analysis diagram, but really what we look at when it comes to sentiment is kind of our own proprietary metrics that we're still playing with and still tinkering with, which is why I'm not going to kind of tell you how we're looking at it, but just know that we're looking at qualitatively, kind of the quality of interactions between people and the amount of interactions is kind of the 2 kind of axes we're looking at. So yeah, that is Snapchat. Hope you liked it, especially if you're new here. And if you're new here and you did get all the way to the end, let me know. That'd be cool. But yeah, for everybody else, hopefully you like these. When I think what's going to happen is when we see cool moves like this, we're always going to kind of take a look at it. But we are definitely cleaning up our kind of framework to kind of baseline all these stocks. So we'll go ahead and put all these scores up and see how we do, and see ideally all the scores in rating a month from now or 3 months from now, whatever that time period is. And so this is more of a 1 to 3 month swing trade scoring, right? So especially with the entries and everything. So we will take 3 months from now and kind of rack and stack all the stocks, and essentially weighted, this should match up, right? So if AMD is right now sitting at whatever 86 score, so that's the highest. So AMD should outperform all these other stocks. But obviously, stock price prediction is just palm reading, and nobody has a crystal ball. So it is just a guess, and so don't take this as any type of financial advice. And obviously, I'm not telling you what kind of weights we're doing or kind of how we're doing anything. But yeah, if you like this kind of thing, we do have a macro newsletter that we send out every month, kind of sets you up for the trade. Talks about kind of macro conditions over the course of the month. And yeah, that's free in the link in the description, or you can go to redcliffresearch.com and snoop around. But yeah, thanks for watching, and we will see you probably tomorrow. Later. Bye.